Joining me right now is Cornerstone Wealth Chief Investment Officer Cliff Hodge. Also joining the conversation all morning long this morning is Fox Business's Dagan McDowell and Mahoney Asset Management CEO Ken Mahoney. Great to see everybody this morning. Thank you so much for being here. Cliff, kicking things off with you on a big week for the Federal Reserve. How are you expecting markets to trade once we get this quarter-point hike on Wednesday? Look, we got a big rally underway. To what do you attribute the gains?
Hey, good morning, Maria. I think it must be Tom Brady coming back this morning. All kidding aside, there's some really positive headlines over the weekend related to talks with Russia and Ukraine, and I really think that's what's driving the action here day to day. Now, you did mention the Federal Reserve meeting on Wednesday. We're expecting a quarter-point rate hike. The market's actually now pricing in 7 hikes in 2022. So it would not be a surprise to see investor attention shift from Ukraine and geopolitics back to the Fed.
So the yield at 2.101% on the 10-year. What are your thoughts on interest rates moving higher, even as we're expecting the Federal Reserve to kick off that long-awaited March meeting tomorrow, with the central bank ending it with a quarter-point increase for the Fed funds rate, Cliff?
Yeah, we're more watching the shorter end of the yield curve, because historically that's really what the policymakers have some control over. So certainly would not be surprised to see the 2-year continue to move up a little bit higher. Now, the longer end is driven by supply and demand and by expectations for growth in the economy. And so at 210, we're getting up pretty high, on the higher end of the range that we're expecting. We think we may get up to 225 on the 10-year, perhaps 240 on a blow-off, but certainly not expecting anything, in the 3% plus range, just because of the longer-term headwinds that the economy still faces.
Ken Mahoney, jump in here.
So, Cliff, it feels like it's Groundhog Day, doesn't it? Like that movie with Bill Murray, funny but not so funny. We wake up, futures are higher, Putin's ready to negotiate. By late afternoon, we sell off, sharply into the close. Wake up the next morning to Sonny and Cher, I got you, babe, and here we are, again, futures higher. What's going to break this vicious cycle that we've seen and start getting some buying into the close, which usually shows institutional support?
Well, one of these days, these headlines are going to have to stick, right, as it relates to Russia and Ukraine. The offensive, from Russia's perspective, perhaps may not be going as well as they initially thought. There's reports of, and you guys have been covering it, tanks stuck in the mud, very low morale from the Russian side. And so from our perspective, we don't think this thing has gone anywhere near the way that Putin thought when he initially decided to invade. And so as the siege continues on, it's likely going to get a little bit worse, but we do think there is light at the end of the tunnel, perhaps even a peace deal here in the coming days or weeks, hopefully.
All right, Cliff, we'll be watching that, of course. We just had the deadliest day yesterday, but there are reports of continued talks. We'll see about that, Cliff. Thanks very much. Cliff Hodge joining us this morning ahead of a big week on Wall Street. We are just getting started this